Welcome to Global Signs. I'm Bruce Han. From Hong Kong, Derek Chung, CEO of Neutron Pacific Limited, will share his insights on the economy and financial markets. Derek's successful track record is due to his extensive experience in real estate, hedge funds, private equity, and investment banking. Neutron Pacific provides advice on global real estate investments. Derek, Kung Hei Fa Choi, welcome to the show.
Kung Hei Fa Choi, thanks for having me.
Thank you. Quantitative tightening will soon become reality. There's a debate now over how many times it should be raised this year. What do you think is the appropriate interest rate level for the United States?
Everyone right now is talking about market neutral interest rate, but so far I haven't seen anyone that is, scientifically, viable, I would say, in terms of number. And the Fed will continue to be very careful in raising interest rate in order to avoid hurting its economic recovery, as well as hurting Biden in this upcoming midterm election later this year. So current market consensus is expecting 25 to 50 basis point in March this year, and then another 2 to 3 hike in the rest of the year. So if you rely on the market, number, then people generally think that the market neutral rate would be about 2 to 3%.
The U.S. stock market had one of its best performances last year, but started the year on a quite sluggish note. What is your outlook for the U.S. market for 2022?
Last year, the U.S. stock market has been doing well, but if you exclude the top five, the biggest five, actually, the many stocks in the U.S. have actually declined significantly, easily 20% to 50% already. So I would say that, since the beginning of this year, the U.S. stock market indices start to fall. So that means that, even the biggest have started to fall already. So given the fact that, we are going to see quantitative tightening, and I would imagine that, the stock market in the U.S. will continue to be very volatile and overall in a declining trend to reflect the, currently still very high valuation.
Concerns are rising over the Chinese economy due to the contraction of its real estate market. What is your outlook for the Chinese economy?
It is the official view of the Chinese government that the economy is not doing well and they will continue to face a challenge. But different from the U.S. government, Chinese government has a lot of tools that they can use to boost the economy, in particular on the interest rate, flexibility. Recently, they have already cut the interest rate, and on the other hand, they can also cut the triple R. So that would help boost the banking, liquidity in the market, and also they can also increase the fixed asset investment through infrastructure, building railway, all these roads, all these, fixed assets. And then in order to also create jobs and boost the economy. But given the fact that, common prosperity and also is becoming the ultimate goal of the government, and also they need to push the birth rate because the birth rate right now in China is too low. So they will, I would imagine that they wouldn't allow the housing speculation will come back again. And then, but the thing is, given the fact that the economy is not doing well, they may relax a little bit in terms of the housing anti-speculative policy. But every time that the Chinese government, relax, there may be a technical rebound among the property names. So that is the situation right now.
Now, many analysts expect oil to go above $100 a barrel this year. What is your outlook on oil?
It is a consensus view that the oil price will stay high, mainly for the geopolitical uncertainty in Middle East as well as in Europe. And supply disruption is also not going to help. And I also think that, the OPEC would also don't like the price to fall, mainly because of the fact that, the clock is ticking, that, people are transiting away from the fossil fuel or utilization. So that is the reason why I would imagine that the oil price will stay high for some time.
Derek, in addition to surging oil price, it looks as though the world is at war against inflation due to rising raw material and supply chain costs. When do you think inflation will finally be tamed?
Fed had only started, to admit that, the inflation is no longer transitory. But the thing is, the consensus view among the Main Street people has already been formed that inflation will stay high and stay for longer, which is self-fulfilling. Because when people expect the inflation to stay high for long, and they will actually, consume earlier, so that unnecessarily create a demand. If we are talking about inflation come back to the target 2%, I would imagine that it would take easily 1 to 2 years.
During times of austerity, there's an interesting investment proverb that says you should avoid growth stocks and invest in value stocks. What do you think?
Who wins the tech war? Who wins the world? So I would say that tech will continue to be the focus of the world because this is going to be the driver for the global economy and global evolution as well. So I would say that people will continue to look at tech stocks, but on the other hand, people has to look at the valuation because right now the valuation of many tech stocks is very high, unreasonably high, and particularly many tech stocks are actually not making money; they are burning money.
Now, Derek, what is your outlook for digital currency?
The only question that I have is how could you get the delivery, from the cryptocurrency? And those digital currency are actually testing the limit of the various governments in terms of allowing, quote unquote, additional currency on top of its legal tender. So China has already, completely banned this, cryptocurrency already. So I would say that, the risk for those investors of this kind of cryptocurrency could be the fact that, overnight the value could become zero. So, and on the other hand, on top of that, I would like to, talk about NFT as well. NFT is just like trading penny stocks without, any regulatory supervision.
Derek Chung, CEO of Neutron Pacific Limited, thank you so much for being with us today and sharing your views on the economy and the financial markets. I wish you all the best in the upcoming Year of the Tiger.
Thank you for having me.
Thank you. That does it for our show this week. Thank you so much for being with us. Until we meet next week, please be safe and healthy.